Singapore, and also cities like San Francisco, Chicago, Los Angeles. This is an indication that the rankings in the financial centers ecosystem has a lot to do with the rise of wealth management as an industry in itself. In the time that Switzerland started to decline in the last 10 years because of concerns on banking secrecy and its relationship with the EU, Singapore and Hong Kong have been beneficiaries of the move of capital and private wealth out to the rest of the world. But this year, especially, the biggest theme is the rise of single-family offices around the world. Especially in the major centers like in the US, there's been a rise of about 2,000 new family offices. And even in Singapore and Hong Kong, we've seen dramatic developments in our single-family offices ecosystem. What does this tell us? The underlining theme in the evolution of financial centers is that they are moving away from institutional focus to a greater personal wealth focus. As individuals gain more control over their wealth and be able to direct the discretionary incomes, they're looking for jurisdictions that will support them. So the question to ask today, as we start this conference is, what will Malta look like in the next 10 years, in the next 20 years? Which is what I do for a living, try to project what different ecosystems will look like in the future. In 1950, if you lived in Asia, in post-colonial Asia, and you asked yourself which of the Asian post-colonial countries had the best chance to become successful economies, you would have thought about Ceylon, which today is called Sri Lanka. You would have thought about Burma, which today is called Myanmar, and you would have thought about the Philippines. And why? Because they were the best beneficiaries of the social infrastructure that the colonial rulers left in order for them to build on. They had constitutions, they had separation of powers, they had a rule of law, they had elites who spoke English and therefore could hold their own with the rest of the world, and they had great universities. Some of the best universities in the Asian regions were the University of Colombo, the University of Rangoon, where Rudyard Kipling spent some of his time, and the University of the Philippines. You would not have ever thought that the future belonged to the Korean Peninsula, for example, which was in a dilapidating war that had basically flattened the entire peninsula. You would not have thought about Taiwan, which has just benefited from the Kuomintang leaving China and setting up another regime to rule over Taiwan. And you certainly would not have thought about Hong Kong, which was nothing more than a refugee center for people fleeing China, which had just been overtaken by the Communist Party at that time. And yet, just within 20 short years, how did the story evolve and how did it dramatically turn around and changed into a picture where it was exactly these countries that were flattened economically and socially that became the purveyors of economic growth in Asia, and the countries that had the best promise turned out to become the basket cases in the region. There was a time when Japan and the Philippines had almost the same per capita GDP. And then you ask, what makes this difference? There is an author that I like very much, Joe Stadwell, who wrote a book called How Asia Works. I think he now lives in Italy. He's an economist. And he pointed out that the reason some countries are able to make that transition into an industrial economy had to do a lot with what they looked like when they were at the end of the agricultural economy. So at the end of the agricultural phase of Japan's development, Japan was made up of small farmers who owned their little farms, who grew crops that they could have greater control over, and therefore were able to accumulate wealth and look after their own well-being. Whereas in other parts of Asia, in plantations like rubber and sugarcane, you needed an industrial setup, which then sent the small farmer down into servitude. And I saw this same story repeated in the Caribbean region. If you look at the per capita GDP of the Caribbean countries, they range from about 100,000, quite good for Bermuda, right down to 1,000, which is where Haiti is today, a totally dysfunctional state. And yet, when you look deeper, and when I visit this region to try and make sense of this wide-ranging per capita GDP, the story that is told to me is that the thing that made the difference was the countries that could make that transition from sugarcane to banana. And the reason is that sugarcane required an industrial approach. The processing of sugarcane needed capital, and only some families and the state had that ability to invest in that. Bananas, on the other hand, was a small farming option. Any family can just set up a banana plantation. The hurricanes come, the earthquakes come, you just need to cut off the stump and it will grow up again. And because of the ability to own the process of wealth generation, the countries that made that transition in that time, today of course the Caribbean is not known for bananas anymore, but the ones that made that transition were able to generate per capita wealth and also per capita achievements in social and economic terms. My favorite country in the Caribbean is St. Lucia, which generated not one, but two Nobel Prize winners, and very recently a sports star as well. Now, if I were to say to you and ask you, what do you see as being the similarity between an economy like Taiwan today and Jamaica? And on the face of it, you see that there is nothing similar between the two of them. In my eyes, these are two Olympic gold medal winners. One in the semiconductor space and the other in track and field. And of course, we are all familiar with the champions, Usain Bolt, Marianne Fraser, and the others from Jamaica who are winning gold medals and holding their own for a population of 2 million to be able to come up with sports stars that can stand against those of the other bigger nations of the world. And then we ask, what is it about Jamaicans that makes them good, sportsmen? And one of the answers given is because they're West Africans. And if you went to West Africa, there is no indication of whatsoever that they are natural sports stars. The real answer really is that because they work hard, they make great sacrifices, they set their mind to it, and they spend their time growing their skills to get to that level that they did. And the reason they're able to do that is because the social structure supports them. In Jamaica, every school has a school track and field facility, and the competition that draws up the winners that we have is immense. And on top of that, sports is seen as a form of social mobility. And the person who made that difference was the guy in 1948, Arthur Mint, the first Jamaican to win an Olympic gold medal. And he turned out to be a doctor and an Air Force pilot and a scholar on top of being a sports star, and set the stage. And just think about the ways in which this small country of 2 million people fires the imagination of the entire Western world. Bob Marley, his songs still run at the back of our minds and inspires us to this day. So the similar development in Taiwan is the story of how semiconductors became such an embedded core competency of the country. In the 1970s, K.T. Lee, the civil servant who was applying his mind to how Taiwan could industrialize in the way that Japan and Korea had, was looking around for ideas. Maurice Chang had just finished a 20-year career with Texas Instruments, very disillusioned, came back to the country, asked to set up a think tank on technology advancements, and 10 years later, he came up with this idea, thinking that, you know what, let the Americans do all the thinking on design and R&D in chip manufacturing. We will just focus ourselves in manufacturing any chip that anybody wants anywhere in the world at the lowest possible cost. And then he started this industry of chip manufacturing that became so ingrained in the entire economy that it gave rise to other players in Taiwan. So Taiwan is also the world's largest manufacturer of chip housing and chips for special purposes such as radio waves and all of that. And as this culture evolved, you can imagine that the engineering talent coming out of Taiwanese universities will apply themselves to create greater depth in that industry. In fact, Lisa Su, who is the CEO of AMD, and our all-time famous Jensen Huang, are cousins, two levels removed. Their grandparents were siblings. So you can imagine what the conversations around the dinner table in Taiwan looks like. And it's gained a position that is very difficult for any other economy, not even China, to replicate, despite the fact that China tries to steal Taiwanese engineers into its economy. China is also going through such a fundamental revolution. Robin Zeng, the founder of CATL, tells a similar story of how China built its core competency in battery technology. It's an industry that he's been working at in the last 30 years, from the time that there was no talent available, and then to build that over a period of time. Now, when I travel around the world and then visit different financial centers, the conceptual way in which I map out the different players around the world is that financial centers fall into one of two extremes. At one level, a financial center is nothing more than a booking center. And that's the case if financial services as a percentage of your GDP is about 60% and above. So you have Panama, you have the British Virgin Islands that are that way. Although tourism may feature a little bit, but it doesn't really matter. But when you go to the right of this chart, you have financial centers that are trying to become real economies. And that's very hard to do, because the more successful you are as a financial center, the more difficult it is to compete as a real economy. Your wages are higher than that of your neighbors, the cost of your assets, your land, your property is higher, and there are a lot of the industries that you can't do that your neighbors can do. And therefore, looking for that value-added advantage that you have as an economy is very important. If you look at Hong Kong, for example, Hong Kong, the private equity industry in Hong Kong and the capital market in Hong Kong is 1,700% of GDP. The United States, despite having the largest capital market in the world, the size is not even 200% of GDP. So what does that work out in real terms on the ground? If you visit Hong Kong as an entrepreneur, it is so difficult to even get programmers to work out how to do a simple application. You need to outsource that to other parts of the world. And what that ends up making the economy look like is like a desert, except for one or two important things, it can't function otherwise. In the way in which Europe and of course Japan as well made that transition from agricultural to the industrial revolution, The state depended a lot on its relationship with entrepreneurs, with industrialists, with traders who have the capital and financiers as well, in order to be able to make that transition. Singapore provides a very interesting variation on that theme. In Singapore, I like to say this, that the statesman, that the civil servant is the entrepreneur. And it was an accident in history, because in 1965, when Singapore was suddenly made independent, the leadership, the political leadership, tried to garner as much of the talent pool there was in the country. And so they benefited from the ability to get civil servants who could have easily been entrepreneurs themselves. And for that reason, Singapore has a number of businesses and industries that are essentially state-sponsored but highly competitive on a global basis. So if you think about Singapore Airlines, for example, that was the creation of this man, J.Y. Pillay, who retired even as a civil servant. And then when you think about Singapore's Economic Development Board, that was the creation of a very animated civil servant called Philip Yeo. Singapore today is the beneficiary, the largest beneficiary of foreign direct investment in the world outside of the United States. We get about $140 billion worth of FDI every year. And we used to be number 3, and China has fallen below us. And that's because of the talent and the entrepreneurial skills of the civil servant. But my all-time favorite currently is that if some of you have visited Singapore, you've seen how beautiful the airport is, and they've got this huge shopping mall, which is a destination in itself, a game changer when it comes to airports. That was the creation of this gentleman called Liew Man Leong. And the airport was just a cherry on the pie. The pie itself was the creation of a moribund, or rather the transformation of a moribund state-run property company called Capital Land into becoming one of Asia's largest real estate investment trusts, with hundreds of properties right across Asia and Australia and a lot of the Middle East as well. Now, that's the good news. I call it the rise of the competent state. When I started traveling again after COVID, I found that around the world there are many states that are beginning to imagine that they have a competency that they didn't have before. You go to a country like Burundi, they have apps for monitoring your COVID status and so on. And once they were able to do that, they've started imagining that they are able to do a lot of other things to create and build the economy. The problem with that is that the state then goes into competition with the entrepreneur. In Singapore, for example, with the rise of the budget airline industry, Singapore didn't allow that originally. It had to be developed in the neighboring country of Malaysia, where the state is a little bit more incompetent and does not have a great airline, and therefore gave the opportunity for an entrepreneur to set up an airline that has become a very successful regional budget airline called AirAsia that was originally not allowed into Singapore, and then eventually they relented, and today it's the largest contributor to new traffic in Singapore. And so that relationship is very important. Now, in the evolution of financial centers, can I give you this mental map to guide us through the thinking of how financial centers evolved? There was a time when financial centers were not about money at all. They were about the trade in goods. Malta is ground zero for the financial centers of the Bronze Age, right? So right across the Mediterranean coast, there were Greek cities. There were essentially financial centers. And then the core asset in being a financial center became money. There, the Italian families, the Medicis, and the Savoys dominated, and they provided the governance structure where money was concerned. And that moved to Holland when it created the concept of the limited liability company, and then to England, and then to the US. Now, can I suggest to you that we're now entering an era where the core asset in a financial center is information. I have a few more ideas that I want to share with you, but my time is running out very quickly, so I'll go through them as quickly as I can. The forces shaping financial centers today, we now live in a multipolar world, a multi-asset world, and an increasingly networked world. As a non-European looking at Europe from afar, I sometimes feel that Europe is trapped in an ideological framework with which you see the rest of the world. When you look at East Asia and the developments that took place in our part of the world, we were ideologically agnostic. Think about Japan. The Liberal Democratic Party is not liberal, it was hardly democratic, and yet it dominated Japanese politics right through its post-war history. The Communist Party of China is anything but communist in an economic sense. These are countries that focused on outcomes rather than holding on to a framework of perception. And outcomes does not necessarily mean it's a bad thing. You can still be directed by morals, and the biggest, most important moral is the well-being and the progress of your own people. The second idea in financial centers in the multipolar world is that we now see the rise of the global south. There is a lot more opportunity for Malta with the global south because populations are very young. Some countries with more than 50% of the population under 20 years of age. Populations are growing dramatically. There was a time when Europe was twice the population size of Africa, and now Africa is twice the size of Europe and growing. And GDP growths hover in the 6 to 8% per annum as opposed to 1 to 3%. The most important consideration in being a leading financial center, that you are a safe harbor, that you are the place that investors will go to for safety and for quality. And the other element about financial centers in a multi-asset world is that global capital is a zero-sum game. It moves from theme to theme. There was a time when China was a beneficiary, and now that China is out of fashion, that theme has moved on to other parts of the world, to India, to Southeast Asia, and eventually to Africa. And India will also lose out on that global theme. There was a time in 1989 when Europe was congratulating itself through Francis Fukuyama's end of history, not realizing that a new theme was evolving. And the new theme was captured by Jim O'Neill, who wrote the book, or rather the idea of BRICS, and that the future belongs to large countries. And now that theme has come to its natural end, because with AI, large countries are not necessarily the beneficiary. Who knows who's going to set the themes that are going to drive us into the future? I had published a book 2 years ago, Great Transition, the Personalization of Finance is Here. I want to go through some very important points from that book and leave them as points for you to think about. The first point is that there is a big difference between technology taking us to the platform economy and technology taking us to the personalization economy. Many people use the phrase Web 3 and Web 3.0 interchangeably, but they're essentially very different ideas. Web 3.0 is a Tim Berners-Lee idea. He's the creator of HTTP, on which all of the huge industries that exist today operate out of the platform. And Web 3 is actually a Gavin Wood idea. Gavin Wood was one of the co-founders or co-creators of Ethereum. And the whole idea is that it gives increasing ownership and control to the individual to dictate his relationships and his ecosystem. The interesting thing is that Sam Altman, the creator of OpenAI, sits somewhere in the middle. He's also the co-founder of WorldCoin, which essentially wants to give power to the individual, but he had sold the idea of OpenAI to a platform player, Microsoft, in order to take it forward. Now, we'll need to see how that evolution works its way through and the extent to which the global economy will veer more towards the individual rather than to the platforms. Platforms means to be able to onboard millions of users and then monetize them. The personalization model means that you start looking at the profitability of the individual to your economy. And in the earlier slide where I showed where there's a greater focus on family offices and individual wealth, I do see that the whole realm of wealth management is transferring. In the crypto space, there's a lot of activities going on right now, but we need to distinguish them and take a stand as to where technology is taking us and where we want to play. And in this regard, we must not underestimate the speed of the digital natives. I say this because I come from the banking industry. These are old-fashioned people who run institutions which have got core banking systems and huge operating costs, trying to make sense of the new energy that decentralized finance is bringing us. What is decentralized finance? It's 24/7. It does not have any back office cost. It is scalable. You can build applications on them. It provides its own funding. It is not leveraged. What is banking? It's slow. It's not 24/7. It needs downtime for batch processing. It's got a huge back office cost and all of that. And we are seeing today that the traditional industry has to come up to terms with the new standards that the decentralized finance world is bringing onto it. Even in the fund management industry, the world's largest funds are index funds today. So managed funds are losing their appeal. Even the best fund managers will tell you that it is hard to press the performance of index funds, over a 10-year period. And Warren and all of the big investors will tell you that. Another point that I wanted to bring to your attention, that the global financial structure that we are familiar with is unraveling right now. The Bank for International Settlements, the Chinese hate it, and the Americans hate it too, for different reasons. And the banking certainty that we've been accustomed to in the last 20 years since the start of Basel I has started to unravel, and we don't know what territory we are in right now. That has already happened in the World Trade Organization, and is also happening in the accounting world today. When we think about how economies will grow, I know there's a lot of conversation as to the US getting into debt and being able to sustain its own economy. The debt to GDP of the US is about 130%. The debt to GDP of China and Japan is in the range of 300%. So what I'm saying today is that debt is the economy. The capacity of these large nations to continue issuing debt indiscriminately and indefinitely continues forever. Their biggest problem is to be able to sell that debt and distribute it to a global marketplace. And the best way for them to do that is to digitize the debt. Now, having given you a whole big picture that way, how do I want to end today's presentation and fire your imagination? It's the ability to tell your story. I remember when I watched Aquaman, I was thrilled because I'd done a holiday in Sicily and I could identify all of the different locations in that movie. And when the Chinese came up with Black Myth Wukong just in August this year, They had spent the last 20 years of PlayStation and the single-player gaming universe by not being able to capture the imagination of the rest of the world at all. And finally they did. And how did they do it? By telling their own story. The story of how Buddhism found its way from India into China, and how it got translated into the mythologies, the stories of the Monkey King, and all of the locations in which the Monkey King found himself in. And because of this story, it just captured the imagination of the world. Within the first day of launching Wukong, they had 2 million downloads, and within the first month, 20 million and growing. And it creates a subsequent economy of tourism to these locations, and most important is digital assets, which are being created on the back of them. So when I think about Malta, the message I have for you is you are fully capable of punching above your weight. You're fully capable of creating a dream that the rest of the world can share in and projecting yourself on the global stage. Thank you.